This video will cover the different bar types that the DTB system makes use of. So at the moment we have the three bar types, so DTB Analytical Bars, DTB Bars and DTB Bars. So we're going to go through those in a little bit of detail. The first one being the Analytical Bars. With this bar type you can select break at end of day on or off. You can also obviously select your different trading hours templates and the quantity of days to load on your charts. The second bar type is the DTB Bars. This one over here, we do not use the break at end of day option. We can also choose the different range of bars that we can choose. So we can either choose a bar value, so a certain amount of bars to load on the chart, or days on the chart. Now the good thing about the DTB Bars as well as the DTB Bars is that no matter how many days you load on the chart, no matter what quantity of days or quantity of bars you load on the chart, the bars will always be the same. They'll always have the exact same formation on any chart that you have. So if you are sharing a chart with a trading buddy or a trading group, if you have got a specific setting of bars set up and you are sharing your screen with somebody else, they will see the exact same bar formation as what you are seeing, irrespective of how many bars are loaded or how many days are loaded. So that's a really good thing when you are sharing information between different members of your group or different members of your trading team. They're seeing exactly what you are seeing. So those are the three. I'll go into detail on the last one also. So the DTB Bars, the difference between the DTB Bars and the DTB Bars is that the DTB Bars works with the lower price instruments. So it has the same functions as the DTB Bars, where the display of the bars and the formation of the bars are the same across all charts when you're sharing them, irrespective of days and data loaded, but they are for the smaller instruments. So if you're looking at the 6E, the 6B, the CL, ZB, ZN, so all the lower priced instruments that are under, say, the 500 point mark. So as you can see, the NQ is on the 13,500, so that one will always be using the DTB Bars as an example. Okay, so we'll look at the first one. So the first chart that I have loaded here is just an 8-8 analytical. So a very simple chart. It's 8 ticks up and 8 ticks reversal. So that's just showing you, the price moving up 8 ticks, down 8 ticks, up 8 ticks, and if it crosses down below, if it crosses down 8 ticks and another 8 ticks, it will actually form another bar. So you'll notice some of these bars have wicks on them. That's just because when they opened, they didn't go up 8 ticks, but they went down from their open 8 ticks. So a few different examples of this bar. On the analytical, we have an 8 and a 16. So 8 ticks up and 16 ticks down, or 8 ticks down and 16 ticks up. So it's basically just giving you a bit of a indication of price movement, but it's working out different tick size bars. So here's a slightly larger one. It's a 422, so a 4 tick movement and a retracement or a reversal of 22. So the price is either going to go up 4 ticks to form a new bar, or it's going to come down 22 ticks to form another bar down, and then continue with the 4 tick movement. So this is what I call a trending baseline, and the next one is a flat baseline. So again, I've got a 48 candle, so it's a 48 tick with a 4 reversal. So that when I refer to baseline width, it's basically the second value on the chart. So the price is either going to move up 48 plus 4 ticks to form a new baseline, or it's going to just form these wicks and return to the baseline. Next one is the trending baseline look, so 4 at a 96. So that's just showing you trending baselines with those specific values. So we've got the 4 baseline width in ticks, which is this one over here, and then you've got the 96 reversal. Here we have a slightly larger chart, which is 195 ticks with a 1 baseline width. So this is going to show you basically the price movement and deviations of price from the baseline. So with the analytical bars, you can also choose, how many days you want to load, but you can also choose a value in bars. So we'll look at that in a moment too. So if I look at this chart, this is still days. Okay. So this is going to show you a trending baseline chart with 195 reversals. So it's basically showing you the price movement and the deviation of price from that baseline. So very often the price will run and it will form these baselines, and it will show you these deviations of price from that baseline, and ultimately returning to the baseline, continuing and just forming these wicks. So you're going to see that. So as an example, today is the 20th of May at 10 p.m. New York. And from the 20th of May at 1 p.m. So from 1 p.m. or 1:25 p.m. this new baseline formed, and since then the price has been in an uptrending movement, just with these deviations of price from that baseline. So we do have different strategies, automated strategies, that trade these different types of baseline charts, and we'll look at that on a future video. But this is just a great little introduction into the look and feel of the different bar types that we have. So that's analytical. There's a 440 baseline. So also we have the baseline running, and then we have those deviations of price from that baseline. That's the 440, and then we also have the trending baseline with the analytical. So you're going to have the 440. So this one here is a longer baseline. So as an example, this baseline started on the 19th of May at, say, 3 p.m. 4 p.m. We can work on 4 p.m. So from the 19th of May, 4 p.m. all the way up until now, which is the 20th of May at 10 p.m. So the price has basically been in this uptrending movement since that period. So the entire trading session from yesterday, the New York session, it's been in that uptrend. We did have a break of that baseline the previous day or earlier in that day. But once it's formed that new baseline, it basically had that nice running, that had the price running the baseline and then creating these wicks. So to look at a few of these deviations in wicks or in price, we can use the ruler on our left of our chart, and you can basically measure how many ticks that price has moved. So this one here moved 439 ticks. So this one almost came down and formed a new baseline running down, just like similar to this one over here. So it came right down to, very, very close to forming a baseline, and then ran up in price. And continued running. We obviously had the New York Open, which is hectic. The price just had these small little deviations. Continued running up for the rest of the day, and is currently on a wick right now. So currently the price is on a wick of 174 ticks. I've also got a neat little indicator, which we'll look in another video, but a neat little indicator for this chart, and that's basically called the tick, let me just find it. Oh gosh, where are you? There. Tick distance counter. So you load that up on a chart, and it's going to tell you exactly how many ticks the price is from the baseline. So obviously in red, the price is currently 180 ticks away from the baseline. But we'll look at the indicators in another video. So here's another example of the 8-8 chart. So this one here is specifically loading a period of 30 days with a trading hours template. So if you want to know what the price is doing between specific hours of the day, you can load up a trading hours template, and you can choose your break at end of day, and you can load the amount of days that you want. And what that will do is it will basically segment price into those specific trading hours. So it's going to cut the price down. It's going to cut out all the hours, excluding the trading hours template that you've selected. And that can be used for your automated strategies when you're trading specific hours of the day. And these hours can also be optimized using the strategy analyzer for different strategies, which we can look at in a future video. So that one there, you can only apply this type of a chart with break at end of day using the analytical bars. So that is what you would use that for. So whatever trading hours that you specifically select throughout the day, a good way to do it is through the data series, and then selecting those specific hours, and then either running your automated strategies or trading your manual setups for those specific hours. Okay, so that is the analytical bars. Now the next one is the DTB bars. So similar to our first chart with the 8-8, this is going to be the 8-8 for the DTB bars. Now, like I said, with the DTB bars, you can load however many days you want. If you've got a small bar size, like an 8 and an 8, 1 day is more than sufficient. And what I said about this bar is that it will always display exactly the same. So if you had to share this specific chart with anybody else, they will see the exact same bar formation. So that is good if you are applying different indicators to the chart. So you might say, for example, you are seeing a signal on the chart and you're getting a great setup. Like for example, this is shaping up to be a very good buy signal on our shadow trading indicator. So you might share this chart with somebody saying, hey, I'm preparing for a buy signal. This is what I'm looking at. Check it out. And this is, so this is exactly what they will see when they load up the same size bar chart as well as the indicator. So they'll see exact same settings. The good thing about loading the indicators on the chart is it's telling you who has been in control of price, where the divergences are, and our strong momentum line indicator, which is part of the shadow trading. It's just going to give you some really good signals on the chart, but again, we'll look through the indicators at another time. So I'll just remove that temporarily. So the reason why the DTB bars are exact formation as they are is because the chart starts at the very beginning with fake bars. So at the very beginning of the chart, it's going to start with fake bars until it actually meets up with the real-time price. And from that moment on, once it's met the real-time price at the very beginning of your bar, of your chart, that will be in unison continually. So however many days you load, this will happen at the beginning of the chart. But from that moment on, you're going to have this exact same bar formation on any single chart that you share. Okay, so that's the 8-8. Here is a 401 on the DTB bars. So with this one over here, it's the same type of thing. these baselines are going to be in exactly the same location if shared, and they'll always be in the same location amongst all your charts, irrespective of how many days or bars you load. This one here, I selected bars as the data to load because it's just going to load a small amount of data. You don't need to go too far back to see the different baselines. If you can just load 1,000 bars, that will be fine. Again, it's going to show you these baselines, and it's going to show you what the price has been doing on, for the last period. So again, it's going to show you these deviations of price from this baseline. And based on different indicators, it's going to help you and assist on good opportunities to buy and sell based on what the price is doing on these baselines. So that's the 401, and there's the 1,400. So as we saw, the price has been in that long trending environment since before 9:30 basically yesterday. So we've had this long trending baseline of price. So we've had that trending baseline is basically also formed from when the price really rose from this location over here all the way up. So that trending baseline is basically a chart showing like this, and it's showing all those, it's basically showing that on that previous chart. So it's a trending baseline, and what ultimately happens though is the price will trend for a while like that, but at a certain stage it's going to consolidate and it's just going to bounce around certain locations. So you might be looking at your trending baseline chart and then noticing some larger wicks forming. Then you can be looking at your flat baseline chart, and you could be looking and you could be seeing, what opportunities are there to take smaller trades to and from a central baseline chart. So that is for shorter term trading. So that's 400 ticks, and this is obviously the 400 tick trending baseline chart. You can also load a much larger chart. So this is a 3,000 chart. So for those who are interested in much longer term trading, this is going to be an option for you. So on this chart, I've loaded 90 days of data with the 3001 baseline chart. So as an example, here are a few of the deviations of price from the baseline. So we've got quite a few instances of over 2,000 ticks of the price deviating from the baseline. And on the much larger chart, like this 3001, we've had the price since the 25th of February all the way until the 26th of March. So an entire month, the price basically bounced up and down this horizontal or this flat baseline chart, and those were some of the deviations. So as an example, at the beginning or at the end of February, beginning of March, you are selecting your trading options. You may select an entry where you are entering a position at 2,000 ticks. You're putting your stop at 3,000. You're putting your stop at 3,000, and you're putting your target back at the baseline. So there's an automated strategy to do this as well. So every trade that you are taking, it's got 1,000 tick risk, but it's got a 2,000 tick gain. So basically in that month, had you done that, it would have been 1, 2, 3, 4 positions entering, at that type of risk reward ratio. And then obviously it broke up to a new baseline, and again it's going to do the same thing again. So we've basically, since the baseline broke in April, the 5th of April, so between the 5th of April and 20th of May, we've had basically 1, 2, 3 large deviations of price from that baseline. So again, we've got this little handy tool on the left of the chart, which is part of the assembly that you've downloaded. And that can also just help remove your drawing objects. It's got some really good little features on there to use. So this just gives you a much larger overlook at the market of where price is currently, floating around. So at the moment, at this specific stage, the price is on the baseline. So if I just go to my data series and I look at, I just put center price on scale. At the moment, the price is just fluctuating on this baseline. So it's basically just bouncing around right now on the 3,000 tick baseline, and hasn't done anything yet really today. So that's going to give you just a big indication of what price is doing, and at the moment you can't make a decision based on this chart because the price is on the baseline. Okay, so this is a trending baseline. So if you're looking at a trending baseline chart, this has got a slightly larger, it's got a 4 tick baseline width with a 3,000 tick deviation. So it also shows the run up in price, the run down in price, a breaking of that baseline, running down, and currently the price is, if I load up that indicator again, the tick distance counter, it's telling me that the price is currently 2,350 ticks away from the baseline. Okay, there's also a very nice Fibonacci tool that I've devised or designed for this chart, or for any of the baseline charts. It is the let me just see. So the wick trader indicator for the trending baseline and the flat baseline. So you add that indicator, you put in your baseline, your size of your chart. So we're working on a 3,000 chart. So I'll add the 3,000 indicator, give that a moment to load, and that's going to tell you percentages of price away from the baseline. So it's going to give you this yellow line to tell you where the price or where the baseline is. The red line is basically where the price would need to go to break that baseline to be continuing up. So in the ideal environment right now, if you get a very good signal, entering a position there with your target over there is 2,327 ticks, or your stop would be just above where the baseline would break, which is 694 ticks. So those are the type of trades that can be taken on the longer term charts. And quite often you're going to get these deviations of price from the baseline. So as an example, this one over here was also that was a 2,600 tick deviation from that baseline running up. And obviously it did continue up a lot further up until there, which is another 3,000 ticks. But a good trading or a good strategy for this is to enter positions, on a large wick, and even just target the baseline. Okay, so that is the DTB bars for the larger charts. Now we're going to look at the DTB2 bars now, which is just basically the same as the DTB bars, but for this lower priced instruments. So we do not use break at end of day on the DTB2 bars because they work exactly the same as the DTB bars. But these ones have just been specifically designed for the lower priced instruments. So like this there, this is the 6B, and this is going to be, $1.41. So, that's just, this is the bar size, or this is the bar type to use for these smaller instruments. So 6B, 6E, CL, ZB, ZN. So anything that's under the $500 or the 500 point mark the DTB2 bars is designed for that instrument. And the exact same type of formations you can select with the DTB2 bars. So you can also select the trending baseline or the flat baseline. So you can still put those settings into the DTB2 bars. Okay, so that is just a rundown of the DTB bars, the different variations. And the next video that we're going to be cover will be looking at the indicators that make up the DTB system. So thank you for your time, and catch up on the next video. Thank you.